Hey traders, John Howell here. We're going to be doing a market update for you today. We've got a bit of a reversal day happening across a lot of the markets, even the mining sector there. Gold actually got hit pretty hard, and I really want to talk about something about gold that's really important as a trading psychology or trading mentality when actually trading the markets. Plus also a few other things that I want to share with you. Let's get straight into it. Don't place a trade based on what you'll see in this video because there is no guarantees of making a profit in the market. It takes you a long time to become a good trader. So this video here is just to educate you to become a much better trader. Alrighty traders, so let's get straight into it. I want to share something with gold in just a minute, but let me just do a quick little update on the actual stock market itself, or well, the indices anyway. So we can see that what actually happened here was exactly what I was expecting. I expected a bit of a flush down, but on yesterday's video, I talked about how that there was a short-term little support here. Now, I believe we're getting towards the end of at least this leg down. And the thing is this is the reason why I say that. Let me actually bring up just one indicator here, right? So you'll notice that this is the 52 moving average. I'm using the daily charts now, but how I use the 52 moving average, it could be a 60 moving average, 50 moving average. I just like to use 52. 52 is pretty cool for me, okay? But you'll notice what actually happens here, right? You'll notice how that, let's go, right? You'll notice that there's a maximum distance away from the actual moving average. So if let me just bring this up here. All right, so let me just take that off the screen. Look at that there, beautiful resistance breakout. All right, so if I look at the maximum distance from the moving average, you can see here, and this helps you with looking at for overbought and oversold. Use it on any market there, right? So if you look, here was a maximum distance from the moving average before what? Before it came back to it. You notice how we don't spend too much time away from it. It's like an elastic band, stretches out, comes back. So I'm just going to create a parallel trend line and see where we not there. We didn't even get the maximum distance away from there on the downs on that side, not there. So the average distance, that was actually pretty extreme, but it looks like the average distance really is probably somewhere through that point there. You can see that'll be that level there. You can see how that's pretty much, again, you can see how it doesn't get too far away. Now on the extreme, on the downsides, you can see here that this is the maximum distance away. Let me actually just make that real thick. All right. So you can see that that was the maximum distance away from the moving average. And you can see the exact distance before we end up getting what? A bit of a pullback. We actually now go to the maximum distance away. You can see we got there, and then not so much there, but we did get pretty much there to the maximum distance away. Before what? Before we started to find a bit of a bottom and at least a retracement back up. And then you can see what's actually happening now as well too. We're not quite at the maximum distance away from these last ones, but we're getting down there. And also we're getting down there with looking at that major. You can see these major level of support level through here. Now we're getting a bit of a reversal through here. So the market is continuing down, so you definitely don't want to buy it, but we are getting towards the later stages of this leg. Now, what I mean by that is that the market never just goes in any direction, okay? So we know you can see the market, we know we get pullbacks, right? The market goes up, we get a pullback. Market goes up, we get a pullback. So you can see here that even if the market goes up, we get a pullback. Market goes down, and we get a pullback. Market goes down, we get a pullback. Market goes down. So we're getting towards the end of this, at least this down period, before we see at least some form of pullback. Now, what ended up happening was right in at this point, right, let me take all that off the screen there. Right there is, wrong one. Right there was when they did the first rate hike. But the thing is, you can see it was interesting, right? We're coming down. Rate hike happened, and then we exploded. Are we about to see the exact same thing? Is the market about to see a really sharp reversal, or at least a very strong pullback? And if we did get that, the big level I'll be watching for to see whether this is going to be some sort of a V bottom rally out of the markets or not would be at least this line through here. You can see how that line through there if I squeeze it up, that'll be the big significant line. We want to at least get back above that line. We can get back above that line. If we do get the pullback, then that's going to signal to me that we may get something like this, right? And especially if we get a higher low and then break past there, that's now signaling what? We actually now got a low, a higher low. These are the patterns I'm looking for to say, okay, now we're likely to resume the upward trend. I still have the big macro picture, the big fundamental picture. I still see we're getting towards some sort of a significant bottom round about here somewhere. Or maybe we're getting very, very, very close to where we are right now in the market. So that's what I'm looking at there when it comes to at least on a short-term TA. Firstly, once again, just a quick recap is that we are getting pretty strong away from the actual the moving average. So we could be getting at least a bit of a snapback, pullback in the markets. Secondly, is that we have been overall coming down a lot through here. So at least a pullback to what we call like a 50% level. If this is going to be a major topping pattern through here, and this is going to be the crash, we will get probably a sharp rally, a sharp snapback through here, and then we'll start to make what? Another lower high. This will be the danger. This will be the danger. If we get something like this pattern, then now what? High, lower, low, market's in a downward trend. If we get something like that, then I'm telling you, then it's all over Red Rover. But yeah, we've had a bit of a pullback right now. We're in correction territory right now. Well, I think the Nasdaq's actually in bear market territory, but we're in the correction territory. This is what we don't want to see if the market is going to do that. But if the market does reverse like that, we get this lower high period, then we're probably at the top of the markets, and my long-term projections is probably not going to come true. And the big thing I really want to talk about, what I just said there, is that even though I have a overall target of 5,500 by the end of this year, I have a target of that. That's where I believe it's going to go. I don't give a rat's iota what I think. I've learned my lesson so many times that yes, that is my projection, and that's where I see things going overall on a big macro level, and we're likely to see a big move the second half this year and all that sort of stuff. Okay, and we're at all that sort of stuff. But the thing is this, is that if the market continues to tell me we're in a downward trend and we continue to rally up and make another lower high and the market's going, I have to flow with the market. So I have a big long-term projections, but I have to flow with the market and listen to the market. If the market is not starting at least an upward trend by creating a higher low, breaking past previous highs, this sort of stuff, right? This sort of stuff here. Higher low, breaking past previous highs. We want to see at least something like this pattern to start the upward trend. If we don't get at least something like that, the market's in a downward trend. And it doesn't matter what I think, what I hope, what I'm fearful of, that I have to continue to listen to the markets when it comes to that from there. So moving over now through to the Nasdaq, and this is, look at that, it broke out, didn't it? Oh, actually, by the way, while I'm here, guys, a big thing about what I actually had there was actually a bit of a bull flag formation, right? We had the market move up through there, and then we had the flag formation going on through there, right? So that was also the bit of a bull flag formation. A big thing about these flag formations, just quickly before I get onto the gold and silver markets, big thing about these flag formation, guys, is that this flag formation, just like this here, does not mean it's going to be bullish. It just means that it's a flag formation, but wherever it breaks, we're likely to see a significant move. If we do break up like that, we're likely to see a nice move up. But if we do break below it, which sometimes does, just like this one here, we tend to get a very nice move down. So whenever you see a bull flag formation, guys, it doesn't mean bullish or bearish. That's the old school of thought. But the market has actually slightly changed now, where a lot of the actual continuation type of patterns, like an ascending triangle pattern or a bullish flag or a bullish pennant, these sort of a lot of them are actually reversal patterns. So it's really interesting to actually notice that in the markets. So if we have a look at the actual, what is the Nasdaq? The Nasdaq got down to what? So the Nasdaq's 24% from the high to the low. So that's actually quote unquote in bear market territory. What is the S&P? The S&P is, what is that? That is, okay, 15% down. Yeah, we may have a little bit more downside to come, but we could be seeing a significant bottom here soon. And the Dow Jones, which, as you guys know, right, I had this overall And this is the big thing, right, guys? Like, I've been bullish these markets, and I'm just like, but then suddenly when this double top formation came out, I drew this formation, and look what actually happened. It came straight down to there. We had a little bit of a shake and bake in here, but we eventually got down to the target. And this is just another example of through here, it looked like the market was starting to pick back up, right? But as soon as we actually started to reverse, as soon as we actually started to fail and not continue up, I had to make sure I was flowing with the market, especially when we got this breakout here. We were no longer actually going up, and I had to make sure that I go with the market, and therefore that's exactly what happened through there. Let's go have a look at the gold market. Now, the big thing that I'm talking about with gold is that, you know, traders, when we're actually trading the markets, obviously the thing is that it's important to make sure that we're, again, reading the markets, and make sure you grab that free trading course. I recorded the free trading course a few weeks ago, or a brand new trading course a few weeks ago, and it walks you through the 5 phases of the biggest mistakes you're making, chart reading mastery strategies, advanced, my number one indicator that I use, which is free, my number one trading system that I use for income, how I scan the markets, all that sort of stuff. You're going to get that in the free trading course link, a link in the description there. But the thing is this, is that when we're actually seeing the, when I was doing analysis on gold yesterday, the big thing that I was talking about analysis on gold yesterday was that I was saying that I need to wait for confirmation. And this is actually a big thing for traders. Please, one of the worst mistakes that I've made as a trader over time has been trying to jump ahead of the curve. Like, I'm going to quickly get in now before it actually takes off, right? And I was saying, no, I need to wait for confirmation. Now, what was I looking for? What was I actually looking for in the markets? So this is the hourly chart here. I was looking for what? I said in yesterday's market update, I said, okay, here we go. We had, and I'm just going to draw this here, we had a low, a lower high, a lower high. We had a lower low, lower low. We got a higher high here. So I was saying, I'm now getting ready for a possible turning point, but I need to wait for the market to tell me that it's doing this. And the market was through here in yesterday's market update, and I was saying I'm waiting for confirmation to start to add to my gold position, because then if we do get that, I believe it could be the start of a big move up. Meaning, if we got a higher low and we started to break past previous highs, if the market started to find that low, then we could start to see some really, really, really significant moves, and possibly even break the 2,000. And then on my way to my target, which would be the 3,000 on 3K on there, which is that's where I believe gold is going overall. So that's what I was saying yesterday. And the big thing here, as you can see, right, we always wait for confirmation of the markets. This here would be the confirmation pattern to possibly see at least a breaking above a new high. Well, there's a probability of that happening, right? Because we didn't get that, guess what? I didn't actually add to my position, or I didn't even actually trade gold, and therefore I saved myself a lot of money. Now, I did that because guess what? What was I doing? I was waiting for confirmation. And a big thing when we're actually trading the markets is we always want to continue to wait for confirmation. Otherwise, we're going to be in the markets and we're going to be now down, a couple of percent. Maybe even, or depending if you trade in the futures markets, obviously a lot more than that. But the thing is always wait for confirmation. I can talk about false breakouts, and I can talk about this sort of stuff. These are the things that I'm watching to see if there's a possibility of that happening. And then when it does happen, I'm ready for it. And what the things that actually happen, guys, is that when I'm trading the markets, I'm always just trading based off systems, right? Like, I have a set of rules of entries and exits and so on and so forth. And if you actually like to learn some really good trading systems, I'm actually running a bit of a sale there. That's my 4 top trading systems for $4. Again, you can get that for the link in the description there. Again, that's my top 4 trading systems that I use. And also there's an amazing options trading strategy in there as well too. Wait till you see that. Again, just for $4, guys, you can actually get access to those 4 trading systems. Or if you just like to get started, make sure you grab that free trading course. Either one is good. Just go get the help you need. So you can see what I'm talking about there. Looking at silver as well too. Silver was actually another big one, right? What was silver? Silver was another big one where, I took everything off the screen. Silver was another big one where I drew a trend line, and I had a trend line. There we go, there, right, from there to there. That's That's what was happening with silver. And then silver was another one, right? This is actually two situations I'm trying to really enforce with you because it actually saved me a lot of money. I was waiting for the breakout first, then I was looking to get into it because that was giving me the confirmation of seeing a probability in the markets going up, but we didn't get that. We actually got the pullback in the markets. And so therefore I did not enter here, and I did not enter gold yesterday, or I was not looking to at least add to my, or at least trade gold yesterday, because the market was telling me not yet. And this is a big thing. This is all about listening to the market, right? Wait for the market to tell you that it's getting ready to go. And I'll give you an example of what I'm talking about here. Let me actually just bring up Tesla here. Tesla was a great example. Again, this is looking at short-term analysis, guys, but you can see here, look what happened here. We had a high, we had a low, we had a lower high, we had a lower low, we had a lower high. Look at this here. What is this here? This is the formation I was looking for with gold. Get that higher low, and look what happened. As soon as we break that high, look at this here. Look at this move from there to there. Big, 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 big. Really nice move up. Why? Because we had the higher low. See the higher low? The higher low is telling you the buyers are coming in. But what did gold do? Gold did this, right? Gold just and gold has just done that. So we didn't get the higher low, right? So therefore, don't expect the bottom to come in. At least wait for this sort of formation, and then we can start to see the market actually reverse up there. Now, it doesn't mean it's going to just keep going up, right? Because then after this bull move has been done, then we can just see. Then we need to reassess, see what else it's actually doing. Is there any resistance or any other significant patterns, so on and so forth, right? So that's just an example through there. Looking at now through the mining sector. When it comes to that, and I believe, guys, we're getting very, very, very close to a significant turning point in the markets. We've had a very, very strong extended move to the downside, so we could actually get a very sharp snapback out of this level here. Now, depending on what happens, let me actually bring up. Remember the moving average? How far? Remember the moving average? Now, the moving average. I was just about to say something else, but I'll get to that in just a minute. The thing is this, is that if we have a look at the moving average, look at this here. Whenever look at the moving average is still slowly overall trending slightly up. So the momentum here, and this is actually a really good thing, is that when the momentum is trending up like this, and the market's coming down, there's a high probability we're going to at least get a snapback. Now, what we don't want to see, again, let's reassess. I'm actually long the gold mining stocks, actually the GDXJ, this to particular, right? What we don't want to see is the market rally up like this, get a hard and sharp snapback. Like it's probably going to be a very hard, sharp movement up soon. And then we create a lower high, then we do that. If we do that, we're probably going to see something like that. It's not what I want to see, but if we do, then I'm probably going to have to reassess my GDXJ position in the markets because it's not. This is now no longer a movement up, a movement down. I want to see this. If we can get something like that, especially breaking here, guess what this is going to do? This is going to create what? See, it's all the same thing. It's really looking for that higher low, then breaking up. That's what we want to see. We have got the first makings, which is a pullback. I believe we're going to see the sharp snapback soon out of the markets there because we are getting really, really, really overextended, especially how fast this has come down. So I am expecting a hard and sharp, fast snapback out of this level here. So once again, guys, the big thing for me is a movement up like this here. I really want to focus on that 50% level. If we fail at the 50%, which is like, let me actually just draw that. If we fail, like right from there to there, let me take that off the screen. That's the 50% level. If we have a sharp snapback, which I do believe we're going to get some sort of a snapback. If we get a snapback and fail at that, the 38 level, and then start to rally back down, that's not going to be good. But if we do something like this, the market comes back up, and then we start to create a little high low, or if we just simply do something like this, and we get a sharp, like a really hard rally out of this level here, above the 68% and come all the way back up. That's what we want to see there. Either that or the next pattern you want to see is a market rally up, have a bit of a pullback, and then get ready to go again as well too. But we have in the mining sector very hard and fast vertical drop. So I'm expecting to see out of this here, this is actually a real shape and bake, and I'm expecting to see real soon a very nice sharp rally out of this level here. Same for the GDXJ. Again, this is my baby in a sense. we actually hit the trend line today. Let me actually show you what I'm talking about here. So this long-term trend line, as you can see, we actually got a really strong, significant level. We had a breakthrough here. We had a breakout. We're now testing this other side of that support level. Again, we're very strongly overextended on the downside, so I'm expecting at least a little bit of a sharp snapback. What that is, we need to wait and see, and we need to see whether that's going to happen through there. So, but I'm expecting to see some really strong, significant movement out of the markets through there. So let's actually just go have a quick look at Bitcoin for you Bitcoin folks and the cryptocurrency folks. So many people just focus on cryptocurrency. I don't understand why. Like you know, and I was saying to especially all my private clients last year, I'm like, don't get involved with cryptos. You know, get involved with cryptos in 50 and 60,000. And people were calling me nuts last year because I was saying, listen, don't get involved with cryptos because crypto's already made a big move. Don't get involved with it. And I was telling people that to me, gold is the much better decision there. Gold hasn't actually made a move, but your position is down 50% or something right now on Bitcoin. I'm not having a go at Bitcoin. Again, I'm not a Mario. I don't really give a damn about any of the instruments. I'm just looking for the best opportunities. And the best opportunities are like with gold, right? Gold hasn't done anything for the last 12 months. You'd be much better be patient with gold. As I spoke to someone just recently with on the phone call, actually with one of my private clients, and they were saying that they're in gold. They're not in the cryptocurrencies, but they are in gold. But they're getting impatient, and that's what the market does. It waits for you to get that impatient. You know what I'm talking about, right? If you've been trading for a while, if you've been trading for a while, you know exactly what I'm talking about. You know how the market just it waits. It's like you get in and you hold on, you can't take it anymore, and you exit, and it's like as soon as you exit, the thing just takes off. It's like, oh, you son of a bitch. And that's the exact words, right? You do use those words like, oh man, look at that. So, looking at the cryptocurrencies right now, it's actually not looking too good. We're not looking too good here. We really want to see what actually happens here. This is the high. This is a lower high. If we break below these levels through here, what is that level? That's that 36,000 level. If we start to break below that significant main level there, what is that there? Probably that 36, yeah, somewhere through there, I would have to say, that 36,000 level. If we start to get a break below that level there, let's see the weekly chart, then that's actually not going to be that's not going to be good at all for Bitcoin. We do actually have a significant breaking, and that's where you can see this beautiful upward trend. We had a significant bounce through there. We did get a bit of a bounce, and now we're developing some sort of a bull flag or something like that under the markets, but we are developing this strong move down. We're developing this here. If we start to break below this sort of 36,000 level, we could be heading all the way back down to 20. Now, again, anything can happen, right? We do have a little bit of support through there, but if that happens, we could be heading back down to this level through here. So, if you are looking to buy Bitcoin because Bitcoin made a big move last year, guys, don't leave Bitcoin, leave cryptocurrency alone. Go find something else. Go find something that hasn't made big moves, right? The worst mistake that an individual can do is try to jump in on something when it's already made big moves. People think the things that's making big moves, and they did this last year. I saw this on my YouTube channel last year. They were like saying, you know, right, John, you suck. Mining stocks suck, or the mining industry, mining sector sucks. I'm selling it and I'm going over to cryptos because mining is not doing anything right now, and cryptos are going crazy, and I'm missing out on so much money. Then they go to then right now. That's probably 6 months ago. Right now, moving forward 6 months, guess what's happening? That the people that weren't patient with gold. And I'm not having a go at gold. I'm not saying gold is better than Bitcoin. No, I'm just saying because Bitcoin already made a move, you missed it, right? People think that what is doing really well, the best investments are the investments that's actually doing really well. No, right? That's like, and again, market's doing really well. What's going to happen? We're going to get a pullback, right? Look at this here. Look at these big, strong pullbacks. And so therefore, that's the reason why I've always liked gold as an investment, and especially in the last 12 months compared to cryptos, because cryptos has already made an astronomical vertical move. The move is already done. So if you weren't in cryptos back here in 2020 and 2019, you already missed the boat. And that's the reason why for me personally, I'm actually in gold and not chasing the crypto market, because I know I didn't capture the crypto market. But the thing is this, is that what was is probably not what's likely to be again as well too. So we need to be always careful of that, is not to chase the thing. And again, just like this here, right? Look at this here. This is a weekly chart from 2018, 2019, 2020. What did it do? It did nothing, right? This is and the people saying, oh, crypto sucks, Bitcoin sucks, it's gone to zero, blah, blah, blah. This is all the same thing, right? So, and this is exactly what people are hearing right now when it comes to gold and silver. This thing went sideways for how long? 1, 2, almost 3 years this went sideways. Then we made a big move, right? That's what I believe what's going to happen in the gold market eventually. And again, when it does break, it's going to break hard, and we're going to start to see a really strong, significant move, and it's going to be absolutely just crazy. And so therefore, people that are patient, I believe, are going to be rewarded. We just don't know when that's going to be. It could be June, or it could be 2 months from now. It could be 2023 that we finally get that break. But when it does break, I believe we're going to see stuff like this vertical move here. We're going to see this here, but probably quicker in the gold market when it does break. Hey traders, I'm giving away 100% free access to my brand new breakthrough full trading course. This is 8 videos over 10 hours of pure amazing and powerful strategies. This is my most powerful systems and strategies that I've used for the last 16 years, and I'm giving it away for free. So this is what I want you to do right now. I want you to go to johnsfreegift.com, or there should be a link around here somewhere, a button or in the description or somewhere in there. Click on that and you can go get free access to my brand new breakthrough trading course. So go to johnsfreegift.com right now. Go to that right now, guys. You can get full, complete, free membership access. Go do that right now.